The latest draft of the infrastructure bill includes raising $30 billion a year from cracking down on crypto tax evasion. I think it is evasion. Robert Frank joins us now with more. If you don't talk about it and don't pay it, that's not avoidance. That's evasion.
That's right. Yeah, that is evasion, and that's what they're going after here. The crypto industry already fighting to remove part of this infrastructure bill that would crack down on crypto taxes. The draft bill includes new reporting rules for crypto traders that would raise an estimated $28 to $30 billion over 10 years from identifying those tax evaders. Now, right now, very few exchanges actually report taxable transactions to the IRS since the laws right now are very vague. The new bill would impose tighter rules on businesses handling crypto. They would have to report the purchase prices and the sales prices for crypto sellers. Secondly, it would expand the reporting requirements for brokers, so it would apply to, and this is important language, any business that facilitates the transfer of digital assets. So that is much broader definition than just broker. It would also require any digital asset transactions of $10,000 or more to be reported to the IRS. Now, the Blockchain Association saying these rules pose a, quote, imminent threat to the budding crypto industry here in America. They say the rules could hit crypto miners and maybe even investors. The industry also arguing that tax evasion is not widespread and a crackdown won't raise the expected revenue. But IRS Chief Charles Rettig saying in April that cryptocurrencies are one reason that uncollected taxes now total up to $1 trillion a year. Joe?
Just wondering what it looks like in terms of how you would round things up. If your wallet is on Coinbase or something like that, it seems like you're going to need regulation or at least some guidelines for what these exchanges do, which, look how well Coinbase did on the IPO. I mean, they got plenty of money. They got to start making it really easy for everyone that's doing business there. They don't generate any information at this point, do they, for year-end taxes, Robert? Do they do that yet?
Some of the exchanges, Coinbase, for instance, say that they provide information to the IRS, but it's largely voluntary, and it's unclear whether it's completed. The other issue, which is really important, apparently crypto holders move their crypto from one exchange to the other quite often. So you might buy it on Coinbase, but then switch it to Binance, and Binance doesn't have a record of what your cost basis was when you first bought the crypto. And remember, this is taxed at a capital gain, so you need to know what you bought it for and then what you sold it for. And so unless all of these exchanges start reporting it, in some cases, the exchanges don't know what their crypto holders bought it for. So that's why everybody has to be on board.
Right. And it usually doesn't stop me, but I don't want to sound stupid, but there's a lot of people that just have they don't even do it with exchanges. Now, how the heck would you be able to follow their movements in the crypto world if you were the IRS?
Yeah, and no, and that's why Janet Yellen and Charles Rettig of the IRS have said that they don't know what the size of the tax evasion here is with cryptocurrency, but they think that it is one main reason why the tax gap, the amount of uncollected taxes, has soared so much. And so until you get this forced mandatory reporting, you just have no idea how much evasion is going on. But it's likely quite a bit, given that, taxes are one reason that people like Bitcoin and they like cryptocurrency.
Hey, Robert, if they can't figure out how much is missing from something like Bitcoin or other things, how confident are they in the tax gap numbers themselves? What are those based on?
Well, they're not. I mean, the broad tax gap numbers are very unclear, and you guys have talked quite a bit about that on the show. But when it comes to cryptocurrency, that's why this $28 billion number, which originally came from the Joint Committee on Taxation, is being challenged by the association, which says, look, we think it could be a lot lower. Others on the other side think it could be a lot higher. So $28 billion is just kind of a guess right now in terms of how much uncollected there could be. It could be a lot more. It could be a lot less.
Shepard Smith here. Thanks for watching CNBC on YouTube.